Hi, everyone. And once again, James is joining me. And today we are going to talk about the direction of residential mortgages. Hello, James.
Hi, Anthony. Hi, guys.
So, what do you have for us today?
So it's just as I'm traveling to and from talking to various people that we've talked about this before, but definitely the temperature that we're getting is one of uncertainty, a little bit of fear, and just reticency to move forward and not sure what to do. And just looking at what banks are starting to bring out in terms of their rates that they're lending out at, especially for people who are looking to remortgage or they're coming to an end of a special deal. If they've got a slightly lower loan to value rate, if you're looking at 55, 65, 70, 70% loan to value rate, that type of thing, there's percentage rates that are coming in just below 4%, which is looking great, even though interest rate is still doing what it's doing. That to me and to the mortgage broker industry is really encouraging. And so it was just to put that message out there that it's from what I'm seeing that the media is putting out. I would want to be taking a different stance in terms of how I'm feeling about that, and it's not to worry if the lenders, sorry, are looking at putting out that sort of percentage rate on mortgages, then I'm going to put myself out there and say I think things will follow suit, and that
It does look as though, as it stands, it's looking as though there may be potentially one more rise, and that could be it. That's if that does actually happen, because effectively, uh, interest rates have almost brought the country to its knees. I don't know what effect the continued rise of interest rates are going to have, because it's not a consumer spending led inflation problem that we have. It is other reasons that I assume they will have to take into account. What effect will it have on inflation by increasing interest rates, if it was initially kicked off by energy, and then it's like a snowball effect, isn't it? So a lot of it rests, I suppose, in what the government does with many of these pay demands. If the
yeah
government does give in to them, interest rates will go up further, probably.
yeah
So
yeah
who's to know? Um, what do you think we'll have another rate rise?
it's I'm still on the fence about that one. I'm not sure. But what I would say is that if you are in a position where you've been saving to purchase, to put down a deposit, or if you're already in your own property and you're paying and it's time to switch, if you're doing all the right things that you would normally do to gear up for that purchase or remortgage, then now is a good time to get in touch with your mortgage broker and have that conversation and look at what best deals are out there. It's certainly not a time to think I don't know what to do, or I'll stay still, or panic or worry about it. There is a way forward through the situation that we're in, and there will be a rate that will get us through. Whether you go for a fixed deal for a certain amount of time or you go for something else, there's an option there that will be able to ride through whether there is another rate rise or not, and get you onto the other side of it. And it's certainly not a time to worry, but to get all the information possible from someone who knows what they're talking about, and move forward for it. And certainly don't worry. There are deals out there to be had that will do us well.
Well, for those who are thinking to themselves, I'm going to sit tight and stay with a variable rate until they interest rates return to normal, um, what would you say? Are we in a new normal? What is the likelihood that we're going to see a base rate of sub 2%, let alone sub 1% in the foreseeable future?
I certainly don't think that's forced. I feel like a Bond villain now. I certainly don't think that's foreseeable near future. No, if ever in the next, I mean, what we had after 2008 was I think you've mentioned before, was a freak low, crazy low, and I think that became a normal for a lot of us that aren't old enough to remember what it was like before that. I think before we get back to that, that's going to be a heck of a long time. And I
If
think,
at all?
yeah, absolutely. I think this is the new normal we're going to be in. I think it will come down eventually. It'll take some time to come down, but not as low as that. And of course, for those that were, my in-laws had their property in the 80s, and they saw it rise to they were hanging on by their fingertips, paying the mortgage on that one. And it's the same with anything we talk about investing in our previous video. If you are managing your finances and you're looking after things well, and you are being measured in your approach, like with any investment, you should be able to ride out the highs, but also the lows as well. And I think this is one of those slower lows than we had in 2008, but it's certainly possible to ride it out. And maybe that's a case of looking at one's spending and deciding, what can be trimmed, what can be saved, and what can be put into different pots in order to get through that.
For those who may be on a tight margin in terms of loan to value, and to whatever degree it does look as though prices are falling, we don't know how much they will fall or how long it will continue. It is all speculative. Nobody can predict. What should they do? Because I suppose they have a little bit of a difficult Hobson's choice here, because if prices do fall and they are waiting to remortgage another few months, and then they may find that their valuation won't stack up to the remortgage that they will need, because if they've currently have a loan that's, say, 75% loan to value, okay, I'm looking at buy to let, but for example, and if there's a slide of 5 or 10% that will bring them up to 80 or 85% loan to value, they won't qualify for many of the better deals. So would you advise them to look at remortgaging sooner rather than later, or at the very least they should speak to a professional and established exactly what options are open to them, so that they can make an informed decision whether they should wait or whether they should remortgage as soon as possible?
Yeah, that's exactly the thing that I would recommend, is to have that conversation with somebody that they can trust, who is, a professional. Recommend, possibly. I always say, like, my mechanic is, a good mechanic who can find a mechanic that I have will tell me exactly what I need doing, exactly what I don't need to do, and how much it's going to cost, and things I can wait and don't have to repair straight away. And it's the same with a decent mortgage broker. They have that conversation straight away, have a look at the where you stand, and they will give you options to look at. Alongside that, as we talked about in a previous video, in terms of managing finances, if you have, if there is any extra that can be cut from elsewhere to add into that savings pot, whether it's to add up, accrue a deposit, or whether it's just to look at extra money that you could possibly pay off on your current mortgage term to pay more off the capital. That's another thing that I would look at doing as well. That helps, because over the years it means you can save thousands in interest. But certainly the first thing to do is to have that sit down conversation, look at exactly where you are on your spends, exactly where you are on your mortgage term, and what deals are currently on offer. But it's certainly not all doom and gloom like the media is suggesting. It's certainly not a bad time to be looking at remortgaging or even buying a house. If you put the work in, you've saved, or if you've got onto the property ladder and you're a year or 2 or 3 or 4 in, and you've as I say, put the work in, it's not a bad time to A, remortgage, or B, get on the property ladder at all. Have that conversation, find somebody who's recommended within your networks, do some research, read around, and go to them and sit down and have that conversation, see what can happen, see what they can get from the whole of market.
Absolutely. And how important is it to speak to a broker who is a whole of the market broker? I think it's very important, but your opinion?
Absolutely. Yeah, I think in anything, if you're limited, you're limited. You're not getting the best options out there. So go for somebody who's whole of market. Go for someone who's FCA directly authorized, if possible. Go for someone who's whole of market, or at least representative of the whole of market. That basically means that they will be able to go to a panel of lenders who are representative of every single deal that is out there on the market. And so whatever your situation might be, I've got a mascot here. Whatever your situation might be, they have the widest available choice and set of options to best suit your needs. It's imperative as far as I'm concerned. It means,
Fantastic. There's so much more to say on it, but we
yeah,
won't bore you all to death with too much in one go. But as the man in the movies always say, we'll be back. So
I need
thank
my
you very
shade.
much, James. I hope that this has
Pleasure.
been some help to you all. As always, feel free to contact James on james@trellos.com for free advice, no problem, anytime. And we'll
Thanks.
see you in the next video.